Morning all. How are we all doing? How's everybody? Happy Monday. Happy July. Finally, halfway through the year. Just going to have a quick look at news to kick off with this morning. Wasn't a lot over the weekend, but we'll have a look at everything that's coming up this week. Have a look at where we are with everything. Nothing much moved since Friday, really. So not a lot to report this morning. Morning, Danny, JC, Martin, Pip, Virginia, John, Burke, Amy, Jerry. How are we all doing? So DAX this morning. Just wanted to quickly look at the DAX before the open. No gap or anything this morning. It's just normal price action this morning. Morning, Baggy, Jacob. So order. So I've just closed out New Zealand dollar Swiss, by the way, this morning. That's why I had that up here. That was the H1 M5 taken on Wednesday last week. Really nice, quick trade, straight in, straight out, job done. That's one ADR as well, so nice little target. That 557 pips. ADR is 46, so good little move on that one. So DAX today, we've got the gap fill to the upside to finish here, which is ADR today. So that's well within reach today. Gap fill's done pretty much, not quite, but pretty much there for that one. We left this on Friday, if you remember. Friday, we just flew. So we've now left that gap to the downside. So obviously last week on Monday, we said we'll be going long this week, looking to fill in these 4 gaps. We filled in 3. We've got 1 left. So the question today is, are we going to do that first or are we going to do that first? Questions. So we'll see where we go at the open. This is 175 ADR to the downside. So for ease, if we're going to stay range bound on the DAX, which we are at the moment, it makes more sense to go up and then down, doesn't it? But we'll see. So the market is bullish, though. Market structure is low, high. Got that sort of double bottom there. So we're putting a higher high, a higher low. So potentially we're going to run to the upside. So push down and then a push up is potentially on the cards as well. So could go either way today, obviously. Same as every day, but that's where we are at the moment with the DAX. Not a lot of pre-market action. Nothing overnight news-wise. We had China PMIs. We had the Japanese manufacturing index, which came out as positive. Apart from that, there's no other news. No other whisperings from Japan either about the FX markets. So they've gone a little quiet on that. So we'll see what happens with the Japanese yen this week. Morning, Brian. Morning, Steve. So we are looking for that push back down on the yen, or push up on the yen, rather, strengthen the yen. So news this week. We've just had the CPI figures for the Swiss, which came out as lower than expected. So the Swiss francs had a little bit of a drop. That's why I was looking at that New Zealand dollar Swiss. Obviously, everything's rallying against the Swiss franc at the moment. So out of that trade. Not a massive impact on the Swiss franc. We haven't got any ADRs or anything yet. So the ADR dash totally dead at the moment. So nothing particularly big has happened there. I've got 3 minutes to the open. Just going to whiz through the news. We've got Spanish PMIs this morning. It's bank holiday in Canada. We've got the manufacturing PMIs this afternoon for the US. So that's the big news this afternoon, half an hour after the open. So we might get a fairly quiet open. Tomorrow morning, we've got the rates for Australia. So this is the big one tomorrow. They are expecting a 4.1. So they're going to freeze rates. I don't think the market is going to be very happy about that. So I suspect we'll have a bit of a drop on the Aussie and the New Zealand tomorrow. They need to do something. Their interest rates are still up at 7. Inflation, rather, is still up at 7. They're lagging behind. They're lagging behind everything. The market's not going to be happy about that at all, I don't think. So if that does come out as a 4.1, I suspect we might get a little bit of a drop on that, but we will see. So that's the big news tomorrow morning. Then we've got the bank holiday in the US tomorrow. So I'm not going to bother coming on doing any live rooms tomorrow because the US is shut. This afternoon, market's shut early as well. So, yeah. So it won't be, there's no point in doing live rooms tomorrow. We will either tomorrow get really, really tight price action, which is quite common when the US is shut. The rest of the market doesn't bother to do anything. Stock indices are obviously shut. The stock markets are shut. Or in the FX market, we get huge ADR days because there is light liquidity in the market. Therefore, you get more slippage. You get more movement in prices as they try to fill orders. They have to go further to do it. Or you just get nothing and they don't bother. So it's literally hit and miss tomorrow. It'll either be massive ADR days, but they will usually undo themselves, or you just don't get anything. So either way, it's not going to affect us in any way. If you're position trading, obviously you just deal with it. So got 1 minute to the open, 30 seconds. So rest of the news this week, we've got FOMC on Wednesday, and we've got OPEC for oil. We've got it's non-farm payroll week, so we've got non-farm payroll and unemployment rates on Friday. And then obviously we got the unemployment claims and the PMIs for services on Thursday. So usual FOMC week. So all back-ended. So all the movement this week is going to happen Wednesday, Thursday, Friday. Market's about to open. Let's watch the DAX. Okay, so there's your open. Your pre-market range is fairly wide today. So that's the 5, 10, and 15 pre-market. This version of the EA that I'm testing didn't take a trade because the close of that candle was far too close to the low. So you quite often get slipped into trades, and then obviously they do exactly what they're doing here and go the other way. So there's no point in taking them. So we'll have a look at the 5-minute opening range for the breakout today. But if you're trading the 5-minute ORB, I think you probably just triggered long on that. Oh, sorry, the pre-market 5. Morning, Thomas. Sorry, feels like we're going to sneeze. I'll try not to sneeze all over the microphone. So fairly volatile open this morning. I was wondering if it was going to be a bit of a quiet one today. But seems like there's a fair bit of volume coming in. Fair bit of spread, put it that way. So totally flat, the Globex session so far today on the US. Look, absolutely flat. Nothing moving anywhere today. Good day on Friday. I was just looking at the P&L on Friday. So did 3.5K on Friday. Weird week last week. Two trends. This is a really good indication of what the ORB trading the opening range breaks like. Trend day, rotation day, rotation day. You just don't make money on the rotation days. On the trend days, you clear up. The way it goes. Mixed bag last week. Right, so not a massive amount of directional movement at the open. So initial cash balance going in, but very, very tight today. So looks like it wants to go long, but as I say, we've got 2 directions to go today, and both are kind of within reach. It's just annoying they left that. Otherwise, it'd be an obvious long today, but kind of makes sense to do that in a bull market, doesn't it? Pull back on that move before rallying to make a new high there. So we will see. Not a lot of direction. Okay, we'll leave that running for a minute. We'll see where we go. We don't appear to want to go anywhere at the minute. More bullish than bearish, obviously, at the moment. So argument for getting that done. Obviously, we don't know still whether or not we're in a bull or bear market, do we? The DAX at the moment, obviously, is looking like it wants to rally. We are stuck, though, up at these highs. So the market's not been able to break to new highs from last year. So there is an argument with the current economic climate for this not to actually rally any further. The Dow is completely stuck. The S&P has now made the break, just. And the NASDAQ has also done the same as the S&P. So we've got two indices rallying, two indices stuck at the moment. So it's difficult to tell whether we are actually back in a bull market or whether we are just range bound in and going to have another drop. So very tricky at the minute where we are. Right, we're not going anywhere, are we? 20 seconds. Just watch the end of this 5-minute candle and see if we get a quick breakout, the 5-minute opening range break. So there's your 5-minute ORB going to go in. Really, not a massive amount of volume, is there? Okay, well, trading the 5-minute ORB. So we'll come back to that later when there's something happening. Right, let's have a look at the FX markets this morning. So ADRs, we've got nothing today so far. It's obviously a new month and a new week. So monthlies, weeklies, and dailies all completely flat at the moment. So we're waiting for some action. Swiss franc obviously has moved today. That's the only real mover based on the Swiss franc news. The yen pairs basically are stuck. We're going sideways on those at the moment. No real directional bias. Lovely M pattern reversal going in on the Swiss franc there. Looks good. But yeah, if you look at all of these yen pairs, we are now on day, what's this? Kind of depends whether you class that day or not, but 1, 2, 3, 4 or 5 days sideways now on these yens. So they have definitely put the brakes on. Whether or not we're going to get a retracement, we'll have to wait and see this week. So, but definitely very quiet overnight. So we haven't had a lot of noise out of Japan about intervention, which is understandable, seeing as it all pulled back on Friday and it hasn't really rallied anywhere overnight. So we'll see what happens on those. Oil, if any of you are in the oil trade from last week, we took the oil long last Wednesday there. That's still going well. Friday, we had a new high put in, which is good. So I'm getting out with these two trend lines here. I'm pretty sure we are just going to get a reaction off of those just because everybody can see those. They're so blatantly obvious. So I'm looking up here today, this second propulsion gap, or rather this is the proper propulsion gap that started that break. That's kind of where I'm looking for a TP today there. So that would be a pretty nice little trade. So it's going to be 35 pips, it's 21, so it's 1.5 ADR basically. So nice R, 3R trade there. Whether we get above those trend lines and then go for the highs, we'll wait and see. So we've got main news this week that is going to affect oil is on Wednesday. We've got the OPEC meetings. So OPEC meetings obviously is where they discuss what they are going to decide to put as barrel counts and production output targets basically for the coming quarter. So we'll be looking here for any kind of guidance as to whether or not they're going to increase or reduce production. So that is the day we're going to get big moves on oil. So there is a possibility we might sit around today, and obviously tomorrow being bank holiday, 4th of July, if we get a rotation day today, quite possibly we're going to get a rotation day tomorrow, and then Wednesday during the OPEC meetings, it'll blast. So my plan for oil, if we don't get up to here today, if we get to here today, I will take it off and just take the profit. If we don't get there today, it's break even already. So what I will probably do is remove the TP if we're not there for Wednesday and just see if we can get a spike on this. Because obviously, if news from OPEC comes out and it rallies oil, there's no point in taking a TP there, leaving a TP in place there, is there? So let's say we're sitting there. We're now on Wednesday. Yeah. If this thing is going to go parabolic because they've said something that is going to boost the oil prices, you don't want to be getting out there, do you? However, if they dump the oil prices, that's the break even. Yeah. So it's either going to be one of those massive winners or it's a break even trade and it didn't work out. So your choice is either to take it off before the news or not. It's either going to go one way or the other off of OPEC. So we'll see what happens with it. But that support is absolutely beautiful. This area here, just holding it, holding it, holding it, holding it. But we are obviously declining. So it is a bearish wedge. Who knows? We'll see what happens on Friday. So that's all your ADRs. RSIs, whoops, are completely flat. There are no RSIs. We're sitting basically, everything's sitting on 50, 45, 58, 38, 50, 40, 55, 66, 50, 56, 40. It's just market is as if it's flatlined. It's dead. So nothing going on at all there. We'll have a look at everything in a sec. Still no breakout. So we're inside bar on the 5-minute ORB. Not going anywhere today, is it? Morning outro. Stopped short on DAX. Did you get a trade on the DAX? Stopped short. You went short, did you? How did you get in short? It didn't break the lows unless you got spread in. Okay, long DAX. So ORB is they're attempting to go long. Not feeling too optimistic about this one this morning. Price action is not exactly setting the world on fire, is it? Straight pullback, look. Whippy, 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 whippy. So there's your 5-minute break. So it just popped up to grab my order and then popped back down. So never good when you get an inside bar off the opening range. We'll see. But yeah, long. Wait to see what happens. Pre-market 5 was that bearish candle. Yeah, so that was your pre-market 5 there. So you got triggered long. But you shouldn't be stopped out on it unless you obviously had a trailer and stopped out somewhere inside the bar. But there's only a long trigger today. Hasn't triggered short yet. Not going anywhere. Amy, I was also short on the DAX and stopped out. How did you guys get short on the DAX? The only way you could have got short is if you had a big spread. So there's the low of the 5-minute pre-market. Yeah, the open of the next candle was on that low. So if you're using an offset, which you should be, to cover spread, unless your broker's obviously, yeah, I mean, if your broker's gone down, then obviously, yeah. But unless you got caught in the spread, in which case, obviously, it's you obviously flip long now. Whippy, whippy open today. Definitely not going anywhere, is it? Right, let's just watch the FX market. We'll come back to that. Morning, Keith. Mine hasn't triggered short, but stop me out of your long. Oh, you're on a trailer. Okay. Do you still use a symmetrical triangle? No, I don't personally. I never have, to be honest, because I can see symmetrical triangles. I don't really need an indicator to see them, but I don't trade with it myself. But it's good. Symmetrical triangles are great. If you've been in here long enough, you'll know all strategies are great. All strategies are crap, basically. It doesn't matter how you get into the market. What you use as a signal, just get in. It's a 50-50 shot when you hit that button. So if you use a symmetrical triangle break, use market reversal alerts EA, use a trend line, use a support resistance level, use whatever you want to use to get into the market. The odds are 50-50 as to whether the trade is going to go your direction or not. So use anything you like. Symmetrical triangles are very good patterns because they are a contraction. So the break of the contraction, it's a bit like trading inside bars on the indices. The break of the contraction is often the start of the next leg. So, but like anything, it can also whipsaw. So if you use a stop, obviously you're going to get stopped out. Brian stopped long overnight in short on the euro US dollar. Oh, yeah. So euro is going to be coming down with the Swiss franc, I would imagine. Yeah. So euro, obviously, and the Swiss are Fed partners. So what happens to the Swiss franc tends to happen to the euro. Aussie New Zealand is coming down fairly hard. That's New Zealand dollar strength by the looks of things at the minute. Bit of strength coming through in the New Zealand dollar. New Zealand dollar yen is attempting a double top on last month's high. Potentially a nice little short there. Drop down to M15. There's your reversal alert. So if that high holds, that'll be a rejection to go short. Bit tighter on the 5-minute. Tighter entry. EU, I was looking at, wasn't I? Sorry. So yeah, your hourly. That's your 4-hour Asian range. So triggered on a long. Stopped out, flip short. Target is below ADR today. If this Swiss franc carries on as it is, I think you could probably hit that today. It wasn't the spread on my Forex funds, Germany 30. It was a regular entry. Yeah, different prices. Okay, so long's gone. Well, not say gone. It's bullish. So we've got 5-minute opening range, inside bar, bullish engulfing with a higher high and a higher low. Now we're putting in a higher high and a higher low again on this 5-minute candle. 3 minutes left. If we break that pre-market high, obviously, as we know today, target on the DAX is going to be ADR. So on the DAX today, we're looking at an ADR hit, basically, which is the gap fill. So you've got plenty of upside room. Got to get through there first. If we get through there, there's nothing much to stop it. So this is the gap fill as well at the moment, if you look. So this level here is to the pip 16203. 16203, exactly to the pip where the seller stepped in on the gap fill. So limit orders triggered at the close of whatever day that was. So we see if we can rally through those. If we can rally through and break those, there's absolutely nothing to stop it until we get to there, which is just shy of ADR. So if we do get that break and hold there, we're off, I think, long today. Should get a nice little trend day. We might want to try and put some decent moves in on the DAX as well today, because obviously tomorrow there's not going to be much movement. With the US indices shut, there won't be any sector buying going on. That'll be held over till Wednesday. So tomorrow is likely to be very quiet on the DAX as well, which is why I'm not going to bother doing live rooms, because I'm not going to trade at all tomorrow on the DAX or the NASDAQ or anything, because obviously they're all shut. So we've got early close on the US indices this afternoon as well. So we might well get a nice big day on the DAX. So worth trying to hold on to this for that gap fill, because that clears that unfinished business. And then we've got downside targets for the rest of the week. We'll see where we go. Certainly looks like it's going along at the moment, doesn't it? So no RSIs. So I'm going to whiz through all the FX pairs. We'll have a look at everything, basically. If there's anything specific you want to look at, obviously let me know. Morning, Neo. But I'm just going to run through everything, basically, because there's nothing to look at. It's all sideways, and has been sideways for the last week. So, as you can see there, pretty well illustrated by the Aussie dollar CAD. So, just looking at basically all the pairs in order. Aussie dollars. So the news this week for the Australian dollar is tomorrow morning, which is the interest rates expected to come out at 4.1. We look at the fundamentals for the Australian dollar. We are sitting at 4.1 with a 0.25% increase last time. The market was not impressed. Well, it was impressed, actually. That's not true. So the New Zealand dollar had a 0.25% increase and absolutely collapsed. The Aussie dollar then did a 0.25% increase and pumped. So obviously, as we know, the Aussie dollar, New Zealand dollar, we got really stuck. So that isn't enough to get on top of inflation. We know that, because inflation is still sitting at 7%. It's the second highest in the world, apart from obviously us in the UK. Just behind New Zealand, except New Zealand is 5.5%. So their inflation is going to come down a lot faster than the inflation in Australia. Pausing interest rates is not the thing that you really should be doing when you've got inflation at those levels. Your unemployment is also coming down, which gives you more wiggle room. When the unemployment is coming down and not going up, that is when you want to really put your foot on the gas. That's the typical play, because increasing interest rates increases unemployment. So why they're going for a pause, I don't know, but I suspect the market isn't going to be particularly happy about that. So we got that to look for tomorrow. So it's difficult to tell with the Australian dollar what's going to happen. We've seen very mixed things happening off of interest rate rises over the last couple of months. We've had lovely big increases, bigger than expected, the market just going down. We've had increased interest rates, market going down. We've had increased interest rates, market going up. Typically, what you see is interest rates going up, market going up, because higher interest rates is good for the currency. But it's not happening like that at the moment, because we're close to terminal rate on a lot of these things. So at the moment, what we're doing is we've taken out that high this morning, and obviously we're pulling back down. We've been sitting in a range now for a week. Yeah, so we've not gone anywhere at the minute. So this thing could take off in either direction tomorrow. Oil prices are going to be affected on Wednesday. The Canadian dollar is obviously linked to oil because it's the main export. So if we get a rally in oil prices and the Australians are not, or the market is not impressed by the Australians keeping their interest rates as they are, this is going to come down pretty fast and pretty hard. However, at the moment, we've just come out of a big drop in the Aussie dollar for a couple of weeks. So it's due a pullback on that move as a profit take, but it could just put in a second leg. So RSIs are flat. There's no opportunities on it at the moment. I am in long at the moment, though, from here. So looking for some kind of pullback. That's the average. So anything you're in Australian dollar today, if you get a chance to get it into break even or get it into profit, it's probably worth taking it off, because there's two things are going to happen. It's either going to fly your way and you could have made a fortune, or it's going to go against you fundamentally for weeks and it's going to hurt you for weeks. We saw that with the Aussie New Zealand, remember. So if you get something that's very close to break even and you want to reduce your exposure on the Australian dollar, don't be afraid to just get out with a small loss on it. And it's better to take a little loss there. So there's the average. You can see the green line. That's where we are at the moment. If at the end of today it's sitting here, close it, because you've got a 50-50 shot of yes, making a % on your account or something, or the alternative is a potential 2 to 4 week pain period. Just better not to take the pain period, isn't it? I would always forego a 1% gain for a squeeze, and we don't know what's going to happen with this Australian dollar. I can't see it being bullish. If you're freezing your interest rates when your inflation is at 7%, the market's never going to be happy with that. However, we saw that with the New Zealand dollar. They put their rates up and the market collapsed on them putting their rates up. So absolutely anything can happen. With that in mind, obviously, you're basically gambling tomorrow as to whether or not this is going to go up or down, and whether it comes out as a positive or a negative or as expected. I don't think you can really read into that any direction in the market. So if you get an opportunity to get out, if this comes up for any reason today and sits in that propulsion gap, I shall be out today on it. Aussie dollar Swiss, same thing. We're on a 4-day sideways movement at the moment. Obviously, the Swiss franc at the moment is having a little bit of a downward momentum. So the Aussies had a bit of a push against it. That looks like that's reversing at the minute. But again, totally flat down here. So we're coming off the back of a big drop. Typically, we would get some kind of retracement if we're going to put a second leg down in. Not really going anywhere. So sideways, again, nothing really to look at on that. Same thing with the Aussies, with all the other Aussies, obviously. It could go either way. Propulsion gap targets are all to the upside. We've got this one here, which we've tested already. Downside target, we've got one there, but there's way more upside targets than downside targets on it. Looks more bullish, but it's all going to be driven tomorrow by what happens with rates. Aussie dollar yen. So again, this is more yen based. It doesn't matter what happens with the Australian dollar tomorrow. This is the yen. So we are waiting for that intervention or for the market to start to buy this yen up, basically to please the Japanese, because they have put the shot across the bow. Some of these currencies have listened, some of them haven't. So again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, really, isn't it? 2 weeks completely sideways. Absolutely no idea where it's going. So just stay out. If you're short in it, like we are on this account here, you're short. That's where I'd much rather be, short everything against the yen, because there's way more chance of an intervention and a massive drop on this than there is of the Australian dollar interest rate rallying above that high. So in short, but not going anywhere. Aussie New Zealand. Had a long on this one from the H1M5 mean reversion off of RSI last week, in out after 2 days. Obviously, this is the squeeze I was talking about. So that was the New Zealand dollar interest rate going up, and obviously them completely tanking it. Rallied all the way up to the highs. Had to get aggressive drawdown control done on that out there. And then obviously we got another 100% basically out of that one to the downside. So again, this one, we are where we pulled back. So this is that retracement for potentially another leg. We haven't gone anywhere. So we're 5 days, we're back to basically the same place. So we're in a holding pattern on all of these at the moment. Aussie dollar, US dollar. That one, we've got targets upside and downside. Very difficult, this one. Have a buy on it at the moment from last week. So there's your entry. So there was a 5-minute reversal alert on that H1 RSI extension. So they got into the trade there. At the moment, the market is kind of sitting, deciding what to do, obviously on this one. ADR is there. There's the lows from last week. So again, same thing with this Aussie US. If at the end of today, we're sitting somewhere around here, this is in profit, close, or break even, up to you. If you put a break even on it, the chances are you're going to get stopped out on the swap anyway. Or if it's obviously on the news event, you might get a whipsaw and then it might fly or whatever. But if you put a break even stop on it, highly likely you're going to break even, isn't it? So, but if it closes somewhere up there, you've got a chance of that holding. So a break even stop on it and put your TP somewhere up at these highs in this propulsion gap. that's going to be a nice profit if you can get it. So obviously it depends what your positioning is on it, but obviously just bear in mind it's all going to be news related, all the movement that's going to happen on this. DAX has just reversed. So yeah, nice. Thanks, DAX. Total whipsaw today, hedged. So long and short. I don't care which way you go, just pick one. So hedged. Looks like it wants to go long again, look. So sellers have just started a rally short. Buyers have bought the open. Looks very bullish to me. Bit whippy though. Right, there's your Aussies covered. CAD Swiss, again, we are 4 days sideways at the moment. Morning, Lisa. Morning, Blue Trader from Spain. Well done. Sun. We've got sun today, a little bit. Pip and Run, what time frame are you on? What do you think? I'll put it out there. I'll give you a clue. US dollar CAD, we'll have a look at that. It's down the bottom, I'm afraid, so you're going to have to wait. CAD Swiss, sideways. Propulsion gaps. Anything you're trading at the moment, virtually the entire market is sideways, okay, at the moment. Obviously, you can see every single propulsion gap on CAD Swiss, for example, is filled. Yeah, we've got a propulsion gap to the upside. When that's done, where do you think it's going next? Yeah, so just anything you're seeing at the moment that is range bound, if we get anywhere near these highs and it's left propulsion gap targets in, they're beautiful short opportunities. So at the moment, if you want to play intraday scalps or sort of short-term intra-week scalps, just use highs and lows. If you've got the support resistance propulsion indicator, you can see all the propulsion gap targets. You can see all the support resistance areas. So just take these trades out of the ranges, basically. CAD Swiss, totally range bound. RSI at 50. Could go absolutely anywhere, couldn't it? CAD Yen, same thing. We are day one, I don't know, somewhere between 5 to 10, depending on which currency it is. Sideways on the yens. We are still sideways on the yens. We're waiting for them to decide what they're going to do with the yen. The market got a shock last week, basically, again from Japan, just saying, "Oi, stop it." They have, but they haven't decided whether they want to drop it or not. So the markets at the moment are sitting on a ton of profit on their yen shorts. They will either decide to get out of it, or they will try and rally and be forced out of it by the Japanese intervention. So either way, I'm short everything against the yen at the moment. Swiss yen, same thing. 1, 2, 3, 4, 5-ish days sideways. Scaled out some of this. Obviously got that massive RSI extension, and since then we've just had that squeeze. They've just squeezed the yen to death, and obviously hence why the Japanese are getting involved. So all the yens, basically, I wish for all the yens, basically, they're all the same. Look, sideways, looking for shorts against the yen, or looking to buy the yen, basically. So sideways, 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 everything sideways, yen. So looking for the yen to come back down again. Euros. Shorten, CAD Swiss is the range trader's dream market. Yeah, there's a lot of them that are at the moment. Depends how far you zoom out, you know, but you know, this is why the propulsion gap indicator is there. Yeah, you know, we leave them behind, the odd one behind every now and again, but propulsion gaps get filled. So you know where the market's going. When there's propulsion gaps left, you know the market's getting back to them. Yeah, it's just what the market does. It fills inefficiencies, it returns to areas, it executed large transactions. So we're looking at the moment euro odd shorts. These will all get done tomorrow. Potentially, if that Australian dollar rallies, let's say, for example, they decide, actually, we're not going to go with a 4.1, we're going to go with a 4.35. If they rally the Aussie dollar, euro odds coming down, all these propulsion gaps are filled. If not, it's going to push up and it's going to fill that propulsion gap on the Australian dollar bad news, and it's going to come back and do these at a later stage, maybe next week, the week after. long as you know where the market's going, you've got half a chance, haven't you? So support resistance as well. You know, everything is playing beautifully to support resistance at the minute. It's just a case of finding the levels really and just scaling in and waiting for the market to, you know, get to where it's going. It's just very, very slow at the moment, very sluggish. It's either a parabolic move or it's a slug. That's literally all we're getting at the minute. And it's all revolving around news. It's like the market's not going to bother. We're not going anywhere or doing anything until we get a news release. Then we'll move and then we'll sit there for 2 or 3 days and we'll wait for the next one. That's exactly what we're getting at the moment. So all the euros are bullish. So the interest rates at the moment with the euro are sitting at 4. We had a 0.25 increase. We're sitting at 5.5 on inflation, which is coming down. Their unemployment is massively high, always is, and it's not moving. So it's okay at the moment to put the interest rates up, but they've got to be a bit cautious. So Lagarde has come out and said we've got 2 more interest rate rises coming, at least. So we're looking at 4.5 on that over the next quarter, probably a little bit more than that, I think. So it should be bullish euro. So ideally, you want to be looking for long opportunities on the euros. So you're better off buying lows at the moment, in my opinion, from a long-term perspective. But as you can see, you know, going back to March, yeah, we're not really going anywhere on anything, are we? The market really doesn't know where to go with anything at the minute. So watch support resistance levels, look for propulsion gap targets. But right now, sideways, absolutely nothing happening. Euro CAD, same thing. So euro bullish at a good level down here. That was the last entry, that trade there. We had one there as well. Didn't manage to get into that one. But yeah, so huge propulsion gap targets to the upside on this. However, if OPEC decide to increase oil production because they're saying demand is increasing and forecast to increase, we're going to get a rally on the oil prices, which is going to boost the Canadian dollar, which drives this back down again. So, you know, it's very, very difficult at the moment to pick any long-term direction. But any short-term direction, like this one here, that H1M5 mean reversion, easy ins and outs. Everything's lovely and range-bound. Or, as I say, parabolic and squeezing. That's all we've had for last month. So Euro Swiss totally sideways, going nowhere. As you can see on here, you know, shorted it there, longed it there. Let's trade it in any direction you like at the moment. All propulsion gaps filled. Yeah, everything against the Swiss franc at the moment is a range trader's dream, the Swiss franc at the moment, because it's just up and down all over the place. Euro pound, this is a tricky one. We're looking at least 1 to 1.25 increase on interest rates on the pound moving forward. We're currently sitting at 5. We will be at 6.25, I would say, by the end of this year, if not early next year. Our inflation is through the roof. Our inflation hasn't changed yet. We are, with an interest rate of 5, you would expect this to be coming down. It didn't. So we are in big trouble in the UK at the moment. The housing market is teetering on the edge of collapse. Not collapse, but we are going to start descending because rents are going through the roof. We've just been told in the UK all of our water rates are going to go up as well. So everything's going up. Energy prices are coming down. No money's been passed on to savers. All that's happening is everybody's mortgages are getting squeezed. And as soon as you put 1.25 on the top of that, more people can't afford their mortgages. They sell their houses. Everybody sells their houses. There's too much housing stock. House prices have to come down because there's so much competition. And all of a sudden you start that spiral. This is going up by 1.25%. So you have to be bullish on the pound. So when you're looking at the euro pound, when you've got the euro having a bullish outlook and the pound having a bullish outlook, you end up with something that just does ranges all the time. Yeah. So it doesn't matter which way you trade this one at the moment. They are both bullish, or should both be bullish. However, the pound is probably going to get the advantage. So I would say more bias on shorts at the minute, but doesn't really matter. So look at these propulsion gap targets that have been orphaned up here. That's purely because we've had a weak euro. Again, increase in interest rates on the euro. It came down. doesn't make any sense. They put the interest rate up. Why is the currency reducing in value? Nothing is making any sense at the moment. So better shorts than longs. You can see the last short there on this euro pound was last week. Straight in H1 RSI extension, M5 main reverse alert in there and out. So nice and easy. What that line is, get rid of that one, don't need it. So yeah, trade it in any direction at the moment, but beware, it's probably going to be a little shorter than long. But again, it comes down to the news. When's the next news events? Euro and pound. We've got Bailey speaking on Friday. Got the PMIs, which just come out as expected for the euro. So there's no news. So you're going to get big decent movement off the back of news. That's the next news we've got coming up. So there is nothing really until the next rate announcement, which is got GDP, which is weeks away, isn't it? Next one. Inflation figures. So there's no euro news coming up at all. Totally dead on the euro news. So could go either way. Right, stopped out on the shorts. So long. That's just an absolute nightmare today. Look at these market. Look at this. You'd think today was the 4th of July, wouldn't you? Totally flat, totally dead. Just hope we get that break long, but might be a double loss day today. How were your results for the month of June? I only made 2.5%. You did better than me. I was 4%. Well, it's 4.3 down in June. I had a nightmare. My fault, because I did too much aggressive drawdown control last month. So, well, I did. That's not strictly the reason. I did too much aggressive drawdown control that didn't work. The drawdown control that did work, fantastic, but losing months basically. So, July will be better. I haven't, touch wood, I have never had 2 losing months on the trot. So it does bode well for July. So, but we will see. Euro yen I've already covered. Euro New Zealand shorts. Well, last one was a short. We are more short targets than long targets on it. However, we're kind of equidistant between the two at the moment, aren't we? Overall, this should be bullish. Euro should be stronger than New Zealand dollar. There's no reason why we shouldn't see an uptick in this, because the euro has got rate increases coming. The New Zealand dollar is sitting at 5.5. Debatable whether this is terminal rate. It has been said that that could be the terminal rate. However, their inflation isn't coming down quite fast enough. So there's probably a little bit more in that. However, you should see more movement in the euro than the New Zealand. So I would be looking for longs on that. We're coming up to an RSI extension on it, back down in this propulsion gap. So if we can get a push back down to ADR today and get that nice A-shaped recovery in, we'll probably get a bounce out of this level. We have just put a lower high in. So again, we were talking about symmetrical triangles earlier. That's not a symmetrical triangle, but it is a contraction. So it can only contract for a certain period of time before it has to break. So longs on that one. Euro, US dollar, total mystery. The US dollar at the moment is completely schizophrenic. It doesn't have a directional bias at all. So when you look at the US dollar on the bias scorecard, it is totally range bound everywhere apart from the Australian dollar, which is understandable because the Australian dollar rates are way too low. So we should be selling the Aussie against the US. Even if they increase the interest rates, I don't think they'll be strong enough. But everything else is totally range bound on the US dollar. And the US dollar's reaction at the moment seems to be, if we get bullish news, we just have a trickle. If we get bearish news, we collapse. So you've got to be looking kind of long, I think, on euro US dollar, just because it's more likely we're going to get bullish news on that. And it's more likely every single piece of bearish news dumps the US dollar. So euro US dollar is going to benefit from that. It is, however, as you can see, just stuck in a range. Again, symmetrical triangle. This contraction, if it continues, will become a blast point. But you can pick a direction on it really any way you like. You can see, the last load of trades taken on this. Had a short trade in there. Had a short there. Had a long there. Doesn't matter what you do, take it long or short, you'll get out of it at some point. So on the hourlies, there's an RSI. We went RSI to RSI. Big, strong move. It's the biggest, strongest pair out there. So you get big, strong moves in it regardless. And at the moment, it's just news. So every time you get a news event, you get a big spike. Yeah. So it's just flip-flopping constantly. So it doesn't matter which way you go. Just wait for some kind of condition in the market to trigger into an entry. So you can take a double bottom bounce off of that, wait for it to get up to last month's high, last week's high, ADR reversals, anything basically on this is just sideways. If you do get a little bit of a squeeze, obviously you can scale in. But the maximum movement we've had on this thing for the entire month, last month, was 378 pips. It's got a 70 ADR. Yeah, it's 4 ADR move, and big swings in it as well. So I don't, I'd be more long than short if you said I've only got to take one direction. I'd be buying it, but not really going anywhere. Not conducive to anything. Pound US dollar, pound odds. Sorry, we've double topped off of the previous month's high. This is last month's high. At the moment, we're just sitting sideways. So again, Australian dollar is going to need some bullish news tomorrow morning to drive this down. Otherwise, could go obviously anywhere, but it's reacting off of the highs. Again, same thing. Take it in any direction really at the minute. Doesn't really matter. That was the last long. That was the last short, which currently in at the moment. So just done a quick scale out on that. Pretty much back to break even on it. Looking to get out in this propulsion gap. That propulsion gap, that would be the ultimate target down there. But sideways again. Yeah, just sideways. Pound CAD, totally sideways after the 2-week squeeze. But again, undone. Yeah. So, there's not really anything you can say about any of these from a directional basis. Nothing has a fundamental edge over anything else still. There are some bits and pieces which are a little bit stronger than others, but with sixes, maximum scale on this is 14. So we are slightly long, mainly because retail. You take retail out of the equation, these are all plus fours. Yeah. So at the moment, the market is shorting the Swiss yen and shorting the pound odd. So those are longs, but there's nothing that says we should be long or short on any of this. Pound, again, 5 days, 6 days, just sideways, reacting off highs. So if you do get RSI extensions, chances are they're going to be sort of 1 or 2 entry trades at the moment on the vast majority of all this stuff. So just wait, be patient, wait for the conditions to come up. Don't just get in. But if you see a decent level, you could scrap the RSI. I mean, the RSI on this one, look, pound Swiss, we haven't had an entry. The whole of June, there was not one trade, the whole of June. Just not enough strength in movement, apart from news. And that was positive, yeah? That was the interest rates going up on the pound. Does not make sense, does it, at all? It's just nuts, this market at the minute. Pound yen we've looked at. Pound New Zealand sideways. Again, last entry there was the H1 M5 mean reversion. Sideways, coming into a propulsion gap. So if you're going to honor market structure on this, very difficult, isn't it, really? But kind of probably long. He should definitely be long. Its pound is stronger than the New Zealand dollar. So just pulling back at the moment. So this propulsion gap, good looking buy. Come up, challenge those highs. Pound US dollar, same thing. Sideways at the moment, should be stronger than the US dollar. Not had much since we've had the negative movement off of interest rates. Again, all bullish against the US at the moment. But again, the US, you've just got to be aware. The US, if we've seen the terminal rate creep every single month, the terminal rate creeps 0.25%. All the Fed are doing is saying, we're there, we think we're there. And then literally, oh, maybe just another quarter, maybe just another quarter. Everybody else has been blatantly open about it. We've got another 1.5%. We've got at least another 0.5% more increases. The Fed are letting us have little 0.25% increases every now and again. They're being so tight-lipped about everything. The market just does not trust the US dollar at the minute. So I'd be very inclined to sort of say we're stuck at this terminal rate of 5.25. However, probably 5.75 by the end of this year. That's not going to please the market enough. So I think we should be looking longs on everything. The only caveat on that is obviously if the yen intervention happens, we're going to get a big movement on the US dollar. So we'll see what happens with that. But at the moment, it doesn't seem like anything's happening, does it? Same as everything else. New Zealand dollar CAD coming up to a nice resistance potentially. So there's last week's high there. We got 2 propulsion gap targets to the upside. So ADR today or 150 ADR over the next couple of days. Good for then trading back down short. Again, no directional bias. PMIs for France come out 46 on a forecast of 45.5. So that's bullish euro. Don't move too quick, will you? DAX is trying to go long still, but no joy. So New Zealand dollar CAD, again, yeah. So any kind of movement up into there that gets us extended, obviously look for short opportunities. New Zealand dollar Swiss, just got out of that one this morning, as I said. Propulsion gap fill, targets to the downside. We've got all this upside stuff at the moment, but this is all based off of this move on the New Zealand dollar. So this was the interest rate change on the New Zealand dollar, which utterly tanked it when it should have rallied it. So we haven't really gone anywhere since that initial flush. We had a couple of days of a drop after the news, and then we went sideways. We've come back up. We've retested propulsion. The market has certainly added shorts into that move. So it is a short. Swiss franc and euro stronger than the New Zealand dollar, so we'd be looking for shorts rather than longs. But you know, the movement on the Swiss franc is erratic. It goes up and down and strengthens and weaknesses all the time because the market pushes money into and pulls it out of the Swiss franc on its way to other places. It's a safe haven, so we will get a lot of fluctuation in it all the time. So it doesn't really matter which way you trade it, but probably long term short. New Zealand dollar yen we've looked at. That's come down off of the high. Last month's high being rejected at the moment. So drop down, M5, M15, reversal alert. You just had the reversal alert on M5 just. So there's your M pattern. So break of that low, we'll confirm it, and then off we go. New Zealand dollar, US dollar, same sort of stuff. So it's all the same. It's all sideways. Propulsion gap fills. So the New Zealand dollar, US dollar, they did manage to pull it all the way back to do the gap fill off of the interest rate change. We've got these 2 big propulsion gaps to the upside. Again, US dollar, you can't call it massively weak or massively strong. So this could go absolutely anywhere. More likely just sit in a rotation. So I'd be much more interested in buying it down off the monthly lows or last week's low or any kind of extension to the downside. But obviously by the time it gets down to there, you're probably going to be ready for another news event on the New Zealand dollar, and then obviously anything can happen. So, but watch the highs, weekly highs, lows, RSI extensions, ADR extensions, same stuff. Just wait for the dashboards to light up, get some signals. Nothing there at the moment though. So US dollar CAD, Canadian dollar is kind of weakening at the moment, although oil is powering up. So we should or could see some potential strength coming through in this Canadian dollar. So longer term, we'll probably get an idea on Wednesday when the OPEC meetings are happening as to whether we're long or short on this. Right now, got long positions on the RSI extension from there, as you can see. That was the news event, and we didn't recover from it. So looking for them to pull back up and retest that area at some point. So we're on our way. Nice big break above the highs last week. We didn't manage to get above the previous high, although we are just holding in an accumulation there. So if we get a second leg up, you can look for at least that distance again, which will bring us back up into there. There's my average on it. You can see the green line. So not particularly worried about it. Looking at that propulsion gap for an exit. But could well get all the way up there. Again, news, we've got FOMC this week. We've got unemployment claim, unemployment rate. So there's lots of news this week, lots of catalysts to move this week. Obviously, it's FOMC on Wednesday, where the Fed will give guidance as to which way we're going with interest rates. We've then got the unemployment claims and the PMIs, and then we run straight into the unemployment rate for both the Canadian and the US on Friday. So this thing is going to move dramatically one way or the other this week. We'll see which way it goes. US dollar Swiss, absolute dream at the moment. Propulsion gap fills. So I'll be buying it in a minute. Look to go up there. But again, last entry was there, long, had another entry there, long. Just about got short in there. One in there as well. But, you know, pick a direction. Doesn't matter, either or. And US dollar yen we've looked at. Shorts. So this is the one that we need to pay attention to. So this is that previous level we looked at for the previous intervention. So that was the first intervention, second intervention, and third intervention for the yen. 145 was where they started saying, do not cross this line, or we will do something about it. They crossed that line. As soon as they crossed that line, within an hour, they did something about it. We're back at the 145 level. We bounced off of it last week. So markets got the message. Whether they pay attention, we will find out. So if we break that 145 level, we'll be watching very closely for what the Japanese say. If we get above there today, tomorrow we will have the next message coming from the Japanese. So we didn't get one over the weekend. We didn't get an overnight one. We got one on Friday last week. I think it was Friday last week, wasn't it? Last note we had from Suzuki or Ada. Can't remember. Yeah, FX moves should be steady in response to fundamentals. Excessive moves will be met with appropriate responses by the government. The current circumstances are not favorable to current policy issues. You keep pushing us, we will push back 3 times harder, basically. So we'll see if the US manages it today. I don't think we will today because it's unlikely we're going to get a massive movement off the US dollar today. Tomorrow, because it's the 4th of July, we might do, because if there's light liquidity, we might get a little bit of a squeeze. But as I said last week, if I was the Japanese government and I was going to do some intervention and I didn't want the US to be able to react, when is the best time to do the intervention? 4th of July. Because why? They're asleep. The banks are shut. So tomorrow, you never know. Could be the day. But we'll see where the market goes with this one today. The US dollar yen is the main trigger for yen intervention because obviously most of the import-export is done in US dollars with Japan. So this is the one that they are most interested in keeping under control, and it isn't. So if we get that sort of thing happening, they will probably put the intervention into place. So we'll wait and see. Nothing we can do, but I'm short. I've got a 250 ADR target, but you know, as I said, 300 to 500 ADR on an intervention is normal. So we'll be down there somewhere. That's it. That's everything. Do you think the DAX should retrace short term? Depends what you class as short term. You talking about intraday or intra-week? Euro New Zealand seems to be at an indecision level. Yeah. You'll find the market today and tomorrow will quite possibly be very flat. So, Lee, you can't answer yes to that question. I gave you a, are you talking intraday or intra-week? You can't say yes. That answers both questions positively. Intraday, I've got no idea what's going to happen. Intra-week, I've said at my targets. We're coming down to there, and we're going up to there. So ADR today, it's more likely, I think, that is today's move, because it leaves that open for shorts long term. But I don't know. It's not moving today, so you know, it's absolute flip a coin. Wow, RSI. We got an RSI alert, people. Euro New Zealand and New Zealand Swiss have hit RSI. Right to the papers. Something's moved. So yeah, I mean, that's, you know, I haven't got a clue. Not going anywhere at the minute. I want it to go long, obviously, because I've got a long on. But I don't know. That Euro New Zealand trade was the best of last month. Well, that one. Yeah, that was a nice ADR reversal. Nice big propulsion gap fill within 2 days. Very nice. Yeah, difficult. Very difficult, this market at the minute. Nothing's doing what it's fundamentally meant to be doing. So it's very hard to call any direction on it. And you know, just got that yen problem at the moment. When they've got that yen sorted out, it'll probably be a little easier, because there's a lot of money sitting in the yen. When that money's all released, stuff will start moving again, I think. It's tricky, very tricky. So that's all I've got for you today. We just got a couple of RSIs we can look at. Euro New Zealand. There we go. So there you go. We just hit the hourly RSI extension to the 70 level, 30 level rather, to the downside. So pull back on this short, back up into propulsion. However, we have got propulsion gap targets to the downside. These are all good accumulation breaks as well. Look. Not quite so much, didn't really break that high. Did retest it though and add, so which we've just retested and add. So yeah, long opportunity there. As I say, don't get too excited. It's probably going to be a really quiet couple of days. So and New Zealand dollar Swiss, that's obviously hit because of the Swiss franc. So there's your extension, just got to the 70 level. But that's my exit from the trade last week. So, and that's still got room. Not sure that's going to get hit, to be honest. I would say market structure is probably going to look to try and break that. So we've got a low, lower high. We've just put a lower low in, but as you can see from the monthly levels, almost a double bottom, isn't it, really? So this could come back up all the way up to there. Again, we need some news catalysts, and New Zealand dollar we've got tomorrow. So tomorrow morning, obviously, is the Aussie cash rate. The New Zealand dollar will move with the Australian dollar. So we'll get some movement on New Zealand dollar tomorrow. So I get the feeling it's likely to be negative if they're not going to increase those interest rates. But obviously, the thing you've got to think about as well with these interest rates is look at the last 2 interest rates for the Australian dollar. And this is obviously a very valid point. We were on a 3.6 forecasting to stay the same. What did they do? They put it up by 0.15. We got to 385. They forecast to stay the same. What did they do? They put it up by 0.25%. Sorry, 0.25%, not 0.15. We're forecast to stay the same. It's highly likely, based on the last 2, isn't it, that they will not do that. They will take us up to 4.35. Whether the market will react positively to that or not, we don't know. Last time the New Zealand dollar did that, they tanked it. So, but you know, nothing is happening as expected. So you've just got to get in and deal with what you get, and whether it be good or bad, you just got to deal with the trade once you're in it. That's what it's all about. But watch support resistance for bounces. Market is reacting very nicely at support resistance at the moment. So, right, DAX is totally stuck. Totally stuck. So's my terminal. Why are you not opening? There we go. So we are literally not going anywhere off of the 5-minute opening range. Not a lot you can do today. Sit on your hands. So I'm not here tomorrow morning or tomorrow afternoon because it's 4th of July, and I'm not anticipating much movement in the DAX tomorrow. There's not much point in looking at the markets tomorrow anyway, because FOMC is on Wednesday. Everything is going to change potentially on Wednesday, and obviously all the news is back-ended this week. So it's a bank holiday. We've got obviously the Australian rates, so be prepared for movement in Australia. The Asian session, we will probably have ADRs. So those Aussie rates, I'll post in the Telegram group. If you're in the Telegram group, obviously, what's going on with the Aussies. But anything you've got Australian dollar related that earth is going on. But my terminal doesn't seem to want to come to the front. So anything you've got Australian dollar related, basically, you might want to get out of it if you've got profit by the end of today. So if you're sitting on stuff that is in profit on the Aussie, or if you've got a little bit too much leverage on, or if it's virtually at break even, you know, and you want to take it, take it. As I said earlier, it's better to take a small loss on something like Aussie US I've got on at the moment, which is in profit, but by that much. If this was sitting down here at the close, I would have no qualms about just shutting that. It's not worth it for one trade that you might make 0.5% to 1% on. It's not worth the risk of it going into drawdown for weeks, because we've seen what happens to the Australian dollar and the New Zealand dollar. DAX is going to stop me out on that long by lots of things. Let's put it back in a minute. We've seen what happens when these Aussies are getting into squeezes. Yeah. So just picture that in reverse. If you were long Aussie, New Zealand, yeah, it's not worth it. Just get out. And if it comes down, get in there. Just miss this bit out. Yeah. So just try and get flat on as much Aussie as you can. Or at least break even it. Or if you wanted to, put a small stop on it so that you get a small stop out on it if it goes the wrong way. Yeah, you just don't want to get caught the wrong side. If the Aussies don't increase the interest rates tomorrow, just can't see any reason why the market would react positively to it. And if they do increase the interest rates unexpectedly tomorrow, as we've seen in the past, yeah, they flew, didn't it? The Aussie dollar flew the last time they did that. New Zealanders do it and it collapses. So, you know, you just cannot tell tomorrow. So just, you know, keep your powder dry, as they say. Right, DAX is stuck mid-range, so not going anywhere. I'll be back this afternoon, 2:20, for the New York session, which I am anticipating being pretty lackluster as well. Market is closing early this afternoon. So these rates for the indices will possibly be quite quiet. So I'm going to watch them. I'm going to let the EA take trades as normal. But judging by the DAX today, I anticipate something very similar to this. So if I see this kind of price action unfolding, just close it, walk away. There's no point in pushing it and come back on Wednesday. But we'll see if we can get a trade out the US this afternoon. And as you've seen, excuse me, this morning, there's nothing happening on the FX market anyway either. So, all right. So that's all I got for you today. Anything you need, I'll be in the Telegram group as usual, but back 2:20 this afternoon, and then back on Wednesday morning for the next Frankfurt session. I will put a post out in Telegram about that as well, and on the socials. So hope you have a good day, and I will see you guys tomorrow. Have a good one. Oh, no, this afternoon. If I don't see you this afternoon, I'll see you on Wednesday. Have a good one.